I've got a question for you. If you've got 20% to put down on a house, but you could afford to put less down on a house, should you still put 20% down? Are you doing it just to avoid paying private mortgage insurance? If you went back 15, 20 years ago, then we'd say, yeah, avoid the private mortgage insurance. Put the 20% down, or let's do something creative like we used to and do what's known as an 80-10-10, where we give you a first mortgage of 80% loan to value, a 10% loan to value second mortgage, and then you would put down 10%. You'd avoid expensive private mortgage insurance. Well, the game has changed. About 15 years ago, something known as risk-based pricing came into being with private mortgage insurance, and now it's not the pariah that it used to be. In fact, it might be smarter to put less money down than to part with a whole 20% down. So give you an example. A $400,000 loan 15 plus years ago, everybody, regardless of credit score, regardless of their debt to income ratio, they're going to be paying about $260 a month just for private mortgage insurance with a 5% down payment. If you put 15% down, it was going to be like $107 a month. Well, today, somebody with good credit, they could do 5% down on that $400,000 loan, and they're going to end up paying about $65 a month for private mortgage insurance. If there are two borrowers, not just one, now you've got the risk that is spread out a little bit. The mortgage insurance companies are going to charge you under $60 a month. If you're doing 15% down, it's as low as $30, $35 a month. So it does not make sense to avoid private mortgage insurance anymore if you can afford the higher payment and you're comfortable with it. That way, you could hang on to $22,000, $45,000, $75,000 in your pocket instead of putting it towards the down payment just to avoid private mortgage insurance. So something to think about. If you are thinking you need to keep on saving money to buy a house, but you've got 5% down or even 3% down and you can afford it and it's comfortable for the payment, do it. Don't wait until you've got 20% down, because it will cost you more to wait than it will just to go ahead and buy it now. Mortgage insurance is super cheap. It's not something to avoid anymore. In fact, it's more expensive to do the old school 80-10-10 program than it ever was. It costs more than paying the private mortgage insurance now. So the roles have changed. So talk to me. Let's look at different options for you. I'm going to go over all of it with you when I'm seeing your picture, putting the puzzle together for you on how to buy a house. And then we'll make the determination whether it makes sense to put 20% down or makes more sense to just say, hey, here's 5 or 10% down. Let's get it done and hang on to all that cash.